All right, I'm not going to mess around today. We have to talk about PayPal stock. I've been pounding the drum about PayPal for what feels like forever now. And just recently, it seems like the market is finally starting to reprice the stock. If you followed my channel, you would know that I believe PayPal stock is tremendously undervalued. And at the end of this video, I'll actually give you my updated price target via my Excel spreadsheet that's made available to my paid monthly members. So stay tuned for that. But let's look at this. Over the past 2 trading days alone, I'm going to give PayPal the benefit of the doubt. It's up 12%. Not quite 12%, but I want to be nice. It's up 12%. And that's actually a pretty big move for PayPal because it seems like PayPal's been stuck basically flat or downtrending for months now. And it's true. It's been months. It's actually been years that PayPal stock has been downtrending. Since its peak in July of 2021, PayPal stock is down, I'm going to call it 80%. That's a pretty rough return, but we have to remember, okay, this company just came in with a triple beat, and this is a company that people have told me is dead or dying hundreds of times, it feels like. And they beat on revenue, they beat on earnings, and they raised their guidance for the year. That is not a dead or dying company. And I'm going to be diving into all of those metrics of why I'm so bullish on PayPal right now. The management team has been here for not even a year yet, most of them. And this transformation is early stages, according to them, and it is. But we're already seeing a remarkable turnaround in the company. But it's comments like this one that I call the golden ticket. Whenever I talk about a stock, I actually root for it to go down short term so I can buy more stock for an even cheaper valuation. But whenever I start getting these sorts of comments on my videos, it means it's time to basically sell the home, take out a second mortgage, whatever you have to do to buy more shares of this company. And in this case, fortunately, it was PayPal. This guy here, Neil, I'll call him, says at this current price level, PayPal still is overvalued to me. This is just beginning. There is a long way to go down. He says maybe $20 per share would be fair value. Whoever thinks PayPal will hit all-time highs again, good luck. I mean, it's true. This is the golden ticket. The reason I call it a golden ticket is because this has happened with Tesla stock. This has happened with CleanSpark stock. This has happened with, I won't name them all, but numerous stocks on this YouTube channel. And this is like, this doesn't fail. Whenever these comments start coming out after a stock has been downtrending forever, people say, they just throw a random price target out there and say, maybe at this price, it'll be fair value. Meta's another one that was the case. I never really talked about them on the YouTube channel, but that's what people were saying. Give it another 50% drop, and that's when it'll be at fair value. Yeah, right. Yeah, right. Dream on. And by the way, as I'm recording this video, I'm like in the middle of a severe thunderstorm warning. So if you hear rain or thunder or lightning, that's that. I hope I don't lose power. I'm going to try and get through this video quick. But to give you the exact numbers, PayPal beat earnings per share by 34%. Geez, that rain. And they beat revenues by 10.5%. And that showed 8% growth, 9% revenue growth year over year. But what I care about most is actually what's on the screen now. It's active accounts, it's number of payment transactions, it's amount of payment transactions per active account, and it's total payment volume, and then these 3 bottom lines here. And I'll go through all these. Active accounts, it's clear. Active accounts, you want them to be increasing because it gives you a broader customer base to make money off of. If you have more open active accounts, you're going to make more money. And, you know, over the past, I would say throughout 2023, active accounts on PayPal's platform combined, that's PayPal, Venmo, Braintree, whatever you want to call it, all of those businesses combined, active accounts were going down, which is not a good thing. However, you'll see it bottomed at 426 million active accounts in the December 31st, 2023 quarter. And this actually was manufactured. The new management team, when they were implemented, I guess you could say, they came out and said that they were going to unload or offload some active accounts that were money losing for their company. A lot of these were just international users, okay, that lost the business money. I don't know if it's the storm getting me all fired up or what it is, but I can't talk. Anyways, over the last 2 quarters, it looks like the amount of active accounts has bottomed, and in the March quarter, it increased 1%. And in the June quarter, it increased another 1%. So that's a really, really good thing that's happening for PayPal. Also, the number of payment transactions, I didn't highlight anything here, but that is also continuing to go up, which is a good thing. But most importantly, the amount of transactions per active account is going up. You can see that here. In the most recent quarter, it was 60.9 transactions per active account. And the reason this is a big deal is pretty self-explanatory. If your active accounts are choosing to use PayPal more and more and more for their transactions, that's a really good thing. You want your customers or your active accounts to be spending money on your platform at an increasing rate. You want them to be doing or completing more and more transactions on your platform because it means you're engaging them better and the checkout experience is getting better for them and they have a good experience using PayPal or Venmo or whatever service it is, so they keep using it more and more often. Because consumers, we don't like friction at checkout. And I'm going to get into that. That's kind of a hint at what's coming later in the video. But total payment volume also is going up. PayPal commands such a large percentage of the total online e-commerce market. And then down here at the bottom, transaction expense rate is going down. You'll see that it peaked in that December 31st quarter, and it's been downtrending ever since then over the previous 2 quarters. Transaction and credit loss rates have been downtrending, which is a really good thing. And then most importantly, transaction margin seems to have bottomed and seems to be recovering. We want transaction margin to increase over time. And if it does increase over time, it means the company's becoming more and more profitable. And when you command this much commerce, if any small uptick in transaction margin can lead to a tremendous increase in net profits and net income at your company. So the other thing people would tell me, you'll see my spreadsheet later in the video. They would tell me, you're way too aggressive, Rex. What are you doing? But, Alex Chris has proven me correct again, that my estimates for revenue and earnings at the company were basically right in line, and a lot of people were telling me that I was way too optimistic for the company. But anyways, PayPal CEO touted strength of their business amid the guidance raise. Yes, they raised guidance, as I mentioned previously in the video. He said, given the strength of our business, we are raising our 2024 guidance and increasing share repurchases, which a lot of people are a fan of. PayPal now sees full-year adjusted EPS growing by a low to mid-teens %, up from its earlier outlook of a mid to high single-digit %. And the company is lifting its share repurchase guidance to $6 billion from at least $5 billion was their prior terminology when it came to share repurchases. So one thing that a lot of people won't mention, I think it's actually really important, this might be kind of a bearish thing, is during the most recent quarter, PayPal actually did 110% of its free cash flow in share buybacks. So it means they actually spent more on share buybacks than they took in via free cash flow at the company during the quarter. When it comes to share buybacks, 90% of it is really, really good stuff. And it usually works out really well if you have a healthy company that's growing, that is highly profitable like PayPal. However, at a certain point, if you do choose to buy back too much stock, you can mistakenly convince Wall Street and other investors that the growth aspects of your business aren't there anymore or they're drying up. You're basically telling the markets that you think the best use of your capital is buying back shares rather than reinvesting capital into the business to grow the business. So you can see if you get, share buybacks way out of control, you buy back way too much stock, it can actually be kind of a negative thing to the markets. I don't think that's what's happening with PayPal. And this little article actually missed the most important point in my personal opinion. They increased their free cash flow guidance to approximately $6 billion. That's up from $5 billion. So all of a sudden they're anticipating $1 billion increase in their free cash flow for this year. I've been saying that this management team has been sandbagging their numbers quite a bit, and you're actually starting to see that play out. This is actually the second profit raise that they've given the markets this year already in 2024. They're kind of sandbagging the second half of this year as well. They've said that they expect earnings and profits to actually be hit a little bit, or to be for some pressure to be put upon them, because they're going to be investing into their growth initiatives more and more. Something that the CEO said in the conference call I thought was really interesting is he said, at this point, they have invested in innovation. They've invested in the consumer experience, and that all happened in the first half of 2024. And they feel really confident, and they're really happy with where their innovation and where the consumer experience is based on the data and analytics they have. He basically said that now, in the second half of the year, it's time to tell the markets about it. It's time to show the markets. It's time to spend money on marketing to go tell the world about this new innovation and this improved consumer experience on PayPal's platform. And I wholeheartedly agree. However, again, they kind of sandbagged it and they tagged on that, profits and margins there's going to be some pressure put onto them because of this marketing spend in the second half of 2024. I think it's all sandbagging. I do, and I think this is going to be a common trend, common theme with Alex Chriss at the helm of the company, which I think is a really good thing. You always want to underpromise and overdeliver for shareholders. That's how you get a stock price to continue to go up quarter after quarter after quarter after quarter. But that's the most important part. I mentioned how if you have too many share buybacks, you can actually convince the markets that the growth opportunity isn't very good for your company anymore. But he mentions our investment spending will ramp up as the year progresses to support our highest priority growth initiatives, yada, yada. These investments are all in support of re-accelerating durable, profitable growth for the company. I am so glad that they mentioned this in the same exact paragraph that they talked about increasing their share buyback plan. I thought that was super smart. And I think this is part of the reason that Wall Street is rewarding the company, because all of a sudden, what was a dead or dying company just triple beat on their estimates. They raised their guidance, and they're set to now buy back 10% of their company at the current share price via a share buyback program in 2024. I mean, that's just crazy. That's unheard of. You never show me a single other multi-billion-dollar company that is going to buy back 10% of their stock or 10% of their company in 1 year. It's unheard of, and that's super, super powerful. And I actually hope that PayPal's share price stays lower for longer so that buyback program is more powerful. But anyways, I'm going to shift over to my price target spreadsheet. Again, this is made available to my paid monthly members. I'm entirely self-funded and I'm entirely independent. So it means a lot to me, you guys that choose to support me monthly, but it also means a lot to me that you're just watching this video. So thank you very much. And again, if you're new here or returning, not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels on the platform. I'd like to keep it that way. But let's look at this. Okay, so when it comes to revenue at the top here, this is what analysts are projecting for the company. They're basically saying that this year in 2024, the company's going to come in with 7.5% revenue growth year over year. Next year, that'll accelerate to 8.5%. And then in 2026, actually have it slowing back down to basically 8% revenue growth. And while this is still really good, a company that's growing at 8% should not be trading for the valuation that PayPal is right now. But I think that analysts are way off, way out of touch with PayPal if they think PayPal is only going to grow 8% in the next 2 years. And this is why, okay? So PayPal has mentioned Fastlane, which is a big, big piece of their business. And I don't think Wall Street is pricing in Fastlane at all to their numbers. What Fastlane is it is the company's future. I've called it the company's future. It is the world's fastest online checkout system, which means much higher conversions for the merchants that use it. And it reduces tremendous friction at checkout for consumers, which merchants love. You want to have the least amount of friction possible. And this actually shows in the data. Early data is showing Fastlane to have an 80% conversion rate. If somebody has an item in their shopping cart and they use Fastlane, 80% of the time they're going to end up buying that product. And that is compared to the industry average of around 50%. That is a huge, huge difference. And I would say they're going to see evidence that of even higher than 80% conversions as they work to perfect Fastlane. This is an early days product. And also as customers get acclimated to the experience, they're going to choose to use it more and more. And it's going to be more and more frictionless as they learn what buttons to push and what not. But this is really, really good news. During the quarterly report or during the earnings call, Alex Chriss, the CEO, said that Fastlane will be generally made available in the United States in the second half of this year. namely in August. Well, today's July 31st, tomorrow's August 1st, so next month this Fastlane product will be implemented and will be made available in the United States of America. This is huge. I can't even I can't even explain to you how big this could be for the company. And this is something that I don't think Wall Street has priced into their revenue estimates at all. Okay? Also, they haven't factored in the big new advertising platform that PayPal has said they're working on. And this is something PayPal should have done a long, long time ago. PayPal has more data on online consumers and online shopping than any other company in the world. And just now the company's going to start to leverage this. This advertising platform at PayPal could be absolutely massive. And when you combine Fastlane with this advertising platform, and you have a company in PayPal that's on both sides of the transaction, merchants and consumers, checkout experience and a merchant platform, it can be absolutely huge. So even me, I have the company doing 10% revenue growth in 2025 and 10.5% revenue growth in 2026. This, I would say, is actually conservative. I think PayPal is going to really reaccelerate their revenue growth to 11, 12, 13, dare I say 14% in 2025 or 2026. That's how big I think Fastlane and this new advertising platform could be. Now, on top of this, I've made some additional adjustments to my price target spreadsheet. I've increased my assumed share buyback. I have the company buying back 7% of the total outstanding shares from here throughout the balance of 2024, another 6% in 2025, and another 5% in 2026. Although the company is really, really buying back shares heavily right now, I don't expect them to slow down their share repurchase program. Even if their stock does start to recover and start to be priced more appropriately, I think they're going to continue to buy back stock. Again, this company right now, their forward PE valuation multiple, again, it's storming out. I don't know if you can hear that. Their forward PE multiple right now is an 11 or 12. And this is a company growing at 8% every single year, hyper profitable, and that 8% revenue growth is very conservative, and they're growing incomes and profits at an even greater clip than the 8% figure for revenue. This is a very healthy company with a very healthy balance sheet that is going to be here for years, decades, the rest of my life probably. I mean, they are at the forefront of e-commerce, and we all know how big e-commerce has already gotten, and we can only assume how big it's going to get as the years continue to progress. But anyways, based on my revenue numbers and based on my earnings per share numbers or my net income numbers for the company, and again, these are probably conservative, I have the fair value for the company this year in 2024 sitting at $140.41. I think PayPal stock is undervalued until it reaches this point. And based on 2025's numbers, I think the fair value of the company should be $168. And based on 2026 numbers, I think the fair value of the company should be $222. So needless to say, the reason I like PayPal so much is even if our economy, let's say we do see a recession, I don't think we're going to see it, but even if we do get one, the downside risk by owning PayPal stock right now with a forward PE multiple of an 11 or 12, the downside risk there is basically non-existent. A lot of the premium and most of the people that have wanted to sell PayPal have now sold out of the stock, which means there's only a large group of buyers or potential buyers left in the pool, which again, worst case scenario, I don't think PayPal stock can fall much further. Best case scenario, we see what? A 4 to 5x return on the stock over the next 2 years. I mean, that is absolutely crazy return that, you know, you only get these opportunities so often in the stock market. And when you get them, you have to take advantage. You have to take advantage. So I have yet to hear anybody tell me a compelling argument as to why PayPal is a dead or dying company. When their revenues are growing, their active accounts are growing, every single one of their major business segments is giving the company profitable growth now. It doesn't make sense. People are lost in the sauce. They look at the recent price performance of the stock and they say, nope, I'm not buying into that. When in reality, that's the opposite mentality that you need to have if you want to be a successful stock market investor and a stock picker in general. is you have to go against what the majority of people are saying or thinking. That's how you make money. By definition, when you buy a stock, you're saying everybody else in the market is misvaluing that company. And you think you have the proper valuation, and at some point in the future, you think the rest of the market will catch on. I think that's it's a apples to apples comparison here. It's spot on with PayPal. Everybody and their mom and grandma and great aunt and sister's brother were saying PayPal is a horrible stock. It's a dying business. And you know what? Competition isn't new for PayPal either. Competition has been here for years now, and all PayPal has done is continue to grow their market share. That's all they've done. So needless to say, I am very bullish on this company. I think the most exciting thing to me is that even according to the management team's own words, they're early in this transformation and they recognize the need for improvement and increased speed in certain areas. They're basically saying we're still early in this. And you know what? The early results are amazing so far. I am super, super happy to be a shareholder of this company. And I always say this, if the stock market were to close for the next 5 years, I would be 100% comfortable owning my percentage of this company and their profits every single year. I don't care what the markets tell me this company is, the fair value of the company is right now, because I don't think that's correct. And again, at this price, I'm going to buy as many shares of PayPal as I can get my hands on. I still want to buy a bunch of call options. I haven't yet. I have a few, not many. I wish I had more. But on any major dips, I might add to that position. If you want my buy and sell alerts, that's also a perky with my membership. You can hit the join button located right next to the subscribe button, or hit the Patreon link in the pinned comment down below. But yeah, this is exciting stuff, and I am bullish. I hope you guys are too. I think that's the only answer here. If you're bearish on PayPal, I think you should probably choose another profession, or you should give your money to somebody else to manage for you, because this is one of those opportunities that you just can't miss as an individual stock picker. Now, that being said, I should also cover my bases here. I'm not a financial advisor. I don't have a crystal ball. I could be wrong. We could get a black swan event. Something could happen at the company that completely destroys their trust, and that would not be a good thing. I don't assign any likelihood to that, but it's always in the range of outcomes. And for the sake of people today, I'm going to cover my butt so that I don't get sued if things don't work out. However, I'm pretty confident they will. But yeah, the company's ramping up their investment spending in the second half of the year. They say there's going to be pressure on margins as a result of that. I don't believe them, because everything they've said has been sandbagging the company's numbers. I hope they continue to sandbag, because that means the stock price is going to go up, and it's probably time for the stock to go up. It's been downtrending for long enough now, but again, if it wants to go lower, I'm not going to complain. So with that, I hope you have a great rest of your day. Stay blessed. Keep 10 toes grinding your chin up. Peace out.